Okay, let's go ahead and get this started. Welcome, welcome everyone to a new week. It is a week of July 28th, and I'm so grateful to be here with you guys and being able to do some market analysis. Today is Market Mondays. We will go ahead and get this started. Let's go ahead and share my screen here. Actually, let me share sound. All right, let's look at news. As always, we look at news and look at what's happening for this week. Last week was a quiet week. There wasn't really much going on last week. Now, however, this week we have a lot of activity going on this week. We have, as you guys can see here, we have a lot of news events happening. We have today the OPEC JMMC meetings. We have job openings tomorrow. We have non-farm employment change on Wednesday, and then we also have the big event, the federal funds rate. And we have also news in Japan, right? They have the BOJ policy rate, BOJ press conference going on in Japan, and the euro. Actually, a deal was passed yesterday. The European Union and the US made a deal on tariffs yesterday, so US reaches trade agreement with the EU. As you guys can see here, after weeks of strained negotiations, the US and the European Union have agreed on trade terms. President Donald Trump and European Commission President Ursula von der Leyen announced Sunday that the 27 nation bloc will purchase $750 billion worth of energy from the US and invest $600 billion more in a country than current levels. The EU would not charge tariffs on US goods and agreed to buy an unspecified amount of military equipment from the country. In return, the US would charge 15% tariffs on automobiles and everything else, quote unquote, from the EU. Trump later clarified that the 15% tariff did not include pharmaceuticals and that the 50% tariff on steel and aluminum will still apply to EU countries. Now, this is very interesting. The EU are investing billions of dollars on energy and military equipment and all these resources from the US. Now, in return, the US will charge 15% tariffs on automobiles and everything else. I wonder what everything else will be. As far as tariffs, right? Probably AI, chip technology, iPhones, laptops, technology, right? That everything else will go towards that as well. Now, the US are charging 50% on tariff on steel and aluminum for EU countries. Now, let's go ahead and look at the markets here. We have obviously S&P 500 hitting all-time highs, and a lot of investors are reinvesting their profits, what they made down here, right before the big bull run. So after President Trump took office, the market tanked because he started to propose tariffs and wars were happening and inflation. So it dropped the market. It affected all markets. And specifically here, the futures market with the S&P 500, it tanked over 2,000 points, right? And it actually, it reached 2022 high down here, right? So it tanked all the way to retest the 22 high post COVID-19 and the Russian and Ukraine war started around this time. So the market tanked after all these events started to happen, right? And then the big banks and institutions and investors and the people, the wealthy people, the 1%, they cashed out and they took out all the profits and reinvested into the markets to shoot the market to the upside. And obviously, while this is happening, they started to print more dollars. And obviously, the value of the US dollar, it is going down. And now that's where we're at. And this is the US dollar right now, the US dollar index. As you can see, it has been decreasing in value over time since for decades and decades since the creation of the Federal Reserve. And I can show you guys here. This is the actual data, right, that the US dollar has been on the decline. So as you guys can see here in the weekly time frame, the US dollar has been decreasing, and we're currently right here. So this is very interesting because the more they print money, the more they print dollars, the dollar just becomes debt. So it loses its purchasing power. It loses the value because there's so much money being printed, and that causes inflation. It causes debt to continue to increase. And so, what are the investors doing, right? What are the banks doing? They're leveraging assets. They're leveraging investments like the S&P 500, the different indices, right? The companies, right? They're investing into crypto. They're investing into commodities. And typically, when there is a, a, a recession going on, when there's something looking like this, when there's a recession, when there's a bearish market happening, to be conservative, to be on the safe side, investors cash out their dollars and they invest into precious metals or accumulating assets that appreciate in value over time rather than having their investments in the stock market or and these markets are affected, are speculated. And we know that, and I hope that you guys know and keep this in mind that all this is being controlled. All this is speculation and manipulation. So what you guys see here is being controlled by people. It's being controlled by the banks. It's being controlled by even AI. There are some platforms and brokers that are using that. Brokers can use artificial intelligence. Artificial intelligence can use bots to control the money movement, to control the markets. And so even the government are using AI. Even the government, the White House are using artificial intelligence right in front of our eyes. Like we don't even, most people don't know about this, but I'm going to tell you guys this because here we keep it very transparent, right? We keep it, as real as it's going to be. Like we're going to keep it real here. And I'm going to share something with you guys that I'm going to share information on this channel that it's going to be mind blowing. Okay. Um, so anyways, the US government, they have their own AI system going on. Also, the staff in the White House, they use artificial intelligence, they use AI technology to to come up with ideas and brainstorm, right? To propose policies, to propose ideas. So they leverage artificial intelligence to do that work rather than having the people do it because obviously people make mistakes, right? But when you have AI technology that is obviously it's artificial intelligence, it takes all the resources, it takes all the information and gather all the information from the computer and using quantum technology, they gather all this data and they build all these AI data centers and all these, all this information they gather from all these sources and they build a AI technology, AI model that can propose, um, you know, uh, ideas that are far beyond, human intelligence. So, so that is why there's so much discussion about AI and so much discussion about crypto because crypto and AI goes hand in hand, right? So that is, we're literally living in the future. We're literally living, it's a new era, right? It's a wealth transfer. So, um, you know, and the funny thing is that this is nothing new. This is nothing new. AI has been around for years and years and years. And I can actually show you guys here. We go back to the 50s. You guys can also look this up. There's a conference that happened back in the 50s. It's called the Dartmouth Conference in 1956. You guys can look this up on YouTube. You guys can look up you guys can do the research. But search up Dartmouth Conference. It happened in the summer of 1956. That's when AI was created. That's when AI was first uh, introduced to the public, right? Introduced to in a conference setting. So look up Dartmouth Conference 1956, and that is when AI was introduced. And over the years, they've been, talking about AI, they've been hiding this stuff behind our backs. They've been holding this information behind closed doors, and but at the same time, they've been giving hints. They've been giving just breadcrumbs of, oh, there's AI, there's this technology happening. That's why they were making movies like Terminator, iRobot, all these movies that have to do with robots and AI, right? They've been um, creating all these movies over the years. And why do you think that is? Because that technology does exist out there, right? That technology does exist, and and now with technology growing and evolving. It's gonna be an we're living in interesting times, and it can be a double-edged sword as well. Like AI can be a blessing and a curse, right? And so just do your own research, and but it makes so much sense how you know they're investing billions of dollars worth of AI and crypto because they see the value and they see what this technology can change everything. It can change the way we live. It can change the way how money works. It can change every single aspect that we see on a daily basis, right? As far as, making transactions, handling money, investing into businesses, real estate, land, it will affect every single aspect. So, and as I'm speaking here, that's what's happening right now, and with all these tariffs and all these, events happening, all right, with all these trade deals. because all these countries are competing against one another to see who will get the most data, right? Data is the new gold. And what I mean by that is that because with AI technology, with crypto, you need data, right? It feeds on data. It doesn't feed on money or how much money you have. It doesn't feed on, obviously it takes money to develop all these data centers, but the artificial intelligence, that the technology itself, it feeds on data. So so keep that in mind, guys. Like, data is a new goal. So the country that has the most data, that has power over that, will rule, right? Will dominate. So why do you think Trump is saying we will be the number one uh, crypto? We'll be the number one crypto capital in the world. Like we will be the 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 U.S. will be known for crypto. The U.S. will be known for artificial intelligence and all this stuff. So and China also plays a huge role. Like China is one of our biggest competitors. Actually, is the number one competitor, right? Is China. China is also racing towards dominance of AI and data, right? So, um, and it's interesting that these deals are happening, and um, why is the EU investing billions of dollars in military material, right? And military equipment. What if there is a World War III happening, right? What if that's going to happen? Like, what if to protect them, to have protection, right? We just never know. God forbid a World War III happens tomorrow, right? Like, it can happen, and it can happen at any moment, right? Especially with what's happening right now with AI, who's going to get dominance over that? Like, this stuff is really happening. So, but yeah, just it's that's why I like to look over news because it affects the markets. It affects what's happening here. Um, so let's look at this. What to expect in markets this week? We have Fed meetings, we have tariff deadline. August 1st is a tariff deadline for countries. So, and I don't for the Fed interest rate, I don't see it changing. It may remain the same at 4.5%. Um, they're talking about, uh, Federal Jerome Powell. They want him to cut interest rates. They're pushing him to cut interest rates. But the Fed are waiting for any policy changes. They're waiting for policy adjustments. So they keeping watch of that. So, but and it says here investors will be watching for more trade deals ahead of the Friday deadline for tariffs regarding several leading U.S. trading partners. And while the Federal Reserve isn't expected to adjust interest rates on Wednesday, updates due this week on U.S. employment and inflation levels could signal the likelihood of rate cuts at future Fed meetings. So actually, July, I don't see it happening, right? There's a low probability that we have Fed cuts happening on for this month. But however, September, we may see a Fed cut in September of this year. Now, July 30th is this Wednesday, right? July 30th is this Wednesday, which is the federal funds rate, right? Now, let's look at this. This is a website that I check, the CME group. This will it will show you the target rate probabilities uh, for each meeting, okay, for the Fed rate. Now, for this month, July 30th, we have a 97.4% probability that it will remain the same at 4.5, between 4.25, 4.5%, and a 2.6% chance that they will cut the rate, right? So most likely there's a high probability that it's going to remain the same. But come September, we actually have 60 60.4% probability that it's going to drop, right? That's going to drop to 25 basis points, and 38% chance that it's going to remain the same, and 1.6% that it's going to drop 50 basis points, right? So this here is an indicator. This is not a guarantee. These are not guaranteed numbers because anything can happen. But I use this as an indicator to see what's going to happen as far as the Fed rates. So it's good to check on this. It's good to check on Investopedia to gather your information and to have a educated decision on what's going to happen in the markets and whether it's going to be a bearish run or a bullish run or it's going to be, consolidating. Now, as we can see here, we have the S&P 500 hitting all-time highs. It already surpassed uh, February's high. Okay, so it's creating new higher highs, and then we have the Dow Jones here. Also, it's going to surpass January high. So as we can see here, we have all the indices that are just booming right now. People reinvesting, people, buying, stocks and shares to to drive to drive liquidity, and to capitalize and take these profits and reinvest it into crypto, right? So you want to keep the money flow. You want to keep that money flow going. You want to keep your money working for you. So that's why they say have money working for you. Well, this is the way. Like you got to have money circulating in these markets because this is a $1 trillion market. Like this is a I can actually show you guys here how much money are circulating in these markets. And let's look at the national debt clock here, right? This is the US debt clock. As you guys can see here, we have over $37 trillion in national debt. $37 trillion. And I don't think that's going to be uh coming back to zero anytime soon. Like that's that's a lot of money. Um and so we have this, we have these are live numbers. And let me see here, the stock market. You guys can see here, stock market at the bottom. We have over $51 trillion circulating in the market right now. USD dollars circulating in the market right now. Over $51 trillion that is circulating in the stock market. We have, $76 trillion in real estate, over 99 trillion in mineral reserves, over 1 trillion in precious metals. What else is here? Recapture assets over $7 trillion. So, and so you guys can see the numbers here for yourself by looking at the US Debt Clock website. We'll break down the numbers on every area. So as you guys can see here, we have over 105 trillion in US total debt. We have over 5 trillion US total interest paid. We have over 1 trillion in credit card debt. And credit card per holder is over $8,000 in debt for per citizen per credit card holder. The average is over 8,000. Now, they have changed this debt clock over the years, and they added some new stuff on here, such as DeFi, bankless future, right? So we have over $1 trillion in USA federal interest savings per year, and we have over $4 trillion in US total interest savings per year. Now, you guys can see also the M2 money supply, how much they have in reserve. You guys can look at the US population, right? The median new home now, 408,000. Median income, 43,000. The average new car, 48,000. So people are earning a median of 43,000. Excuse me, guys. We have the average individual earning over $43,000 a year, right? And how can you live this way? How can you live earning just 43,000 in the USA, especially with all this inflation going on, with all this, with interest rates now? Oh man, this is just crazy. Like you guys can see here, US foreclosures over 92,000 in US foreclosures. And US bankruptcies over 530,000. Now, you guys see here the amount of interest that we're paying over $1 trillion and how much interest, how much debt, local debt over $2 trillion and debt per citizen over 6,000 debt per citizen. And yeah, but we're earning like people are earning on average over 43,000. So you guys see these numbers, it gives you a perspective, right? It gives you a different perspective, it gives you a mindset shift of I gotta be very conscious about this and find ways to leverage my money, find ways to have my money working for me and appreciate and value, right? By reinvesting my money into these assets, right? So instead of holding your money into a savings account, into a that is not growing at all, why would you have your money, stored in a savings at a bank? It's not growing any interest, it's not growing in value. So why not take some of that money and invest it into these markets, and we know that it appreciates in value, right? Invest into the stock market, invest into land and real estate and minerals and precious metals, right? So that way it accumulates. The US, the government are doing that themselves. They're doing that. So why can't you? So we see the numbers here and we see the median income and we see how much people are in debt and we see all these numbers, then it only makes sense for you to also put your money working for you the same way the government is doing with their money. And why will we trust the governments to handle our money and they can't even keep up with their expenses? We're already seeing that the US national debt is over $37 trillion and they're, spending over $7 trillion in federal spending, right? And they're only, the US, the GDP, the gross domestic product is 30 trillion. So it's less than the debt. So the revenue, right, the total revenue for the US, right? It's total local revenue is 2 trillion dollars, over $2 trillion, right? Total state revenue is $2 trillion, about the same. But look at the GDP. The gross domestic product is $30 trillion in revenue and GDP, right? And they're overspending. And in debt is $37 trillion. So it's a $7 trillion difference, right? That is the net. So why would we trust our money and put them in and put our money into their pockets? Why would we trust them to do that, right? So that is why it's very important to gain financial literacy and to gain financial education to be able to control your personal economy, because that is truly the key is to get educated, to continue to jump on these calls, to continue to do your research and read the books. And actually, I highly recommend you guys subscribe to my Telegram channel, and so that way you guys can gain some resources, because I'll be also uploading some resources in my Telegram channel for you guys to check out, and it's very, very valuable. Now, but you guys can look at this USZ clock at your own time. You guys can study it and look at this. I make sure to always come back to this website and to check the numbers, to check, what's happening in the economy. And we'll talk more about this as time goes on, later in the future. So, anyways, going back, so we have a lot of stuff happening here. So we have the Fed rate meeting, we have tariff deadlines, we have job report on I believe is job reports. We have that let me see, on Friday. Actually, Friday is the first day of a new month, which is August. We have NFP, we have unemployment rate, we have uh we have average hourly earnings. So we have that going on Friday, and on Thursday, obviously we have the unemployment and claims. We have the unemployment and claims happening every Thursday. So every Thursday, this is very typical. The unemployment claims event happens every Friday. Oh, I'm sorry, every Thursday. And then this Friday, we have the NFP and we have the job role. So, anyways, we have a lot of activity going on here this week. And so this is a Forex Factory where I check out all the news that's going on this week. And you guys can also filter this yourselves. You guys by clicking on this funnel on the right corner on this green box, you guys can filter your news, your event types. And I check on every single event type. And however, I only check on the red and orange folder. I have that checked. And I look at the Euro, JPY, and USD. These are the different currency pairs. Make sure you guys always are looking at the USD, the US dollar, because that is obviously the US dollar is the dominant currency in the world, right? Above all currencies, despite the fact that it's losing value, right? It's crazy. So, anyways, let's go ahead and look here. We have the Euro USD. It is actually on a has a bearish candle. And it's right now with the EU and the US news, it caused the market to drop. So we have that happening right now. We have the US dollar gaining dominance, right? The US dollar is gaining dominance. Therefore, the EU against the US dollar is causing a bearish run, a pullback, because as the strength of the US dollar increases, the euro decreases, right? So it causes the euro USD market uh, to decline. And you guys can look at the indicators here, the technicals, the arrow, the meter is on the sell. So obviously that's why we have this sell, right? That's happening. So, but coming Wednesday, I'll focus more on technicals. I'll look at we'll do the markups and the chart work. We focus more on that on Wednesdays. On Wednesdays, I host chart work Wednesdays, so you guys can learn more how to mark up, how to look at technicals. But today, every Monday, we look at news and we look at how it also affects the markets and how it correlates with each other, right? And just keep in mind that, when you guys look at news is just the excuse. So whenever you guys see, for example, what happened just recently with the US and EU reaching a trade agreement, when you guys look at something like this and you guys read through the article, you guys read through this and you guys see that it's positive for the US, that will shoot the dollar up. So look at the words, look at the sayings. If it's positive words, if it's negative words, if it's positive news, if it's negative news, if it's positive news, obviously this is positive for the dollar, right? So it's gonna increase it's gonna strengthen the dollar, and that's what's happening, right? As we look at the dollar here, the dollar is shooting up, right? The dollar is shooting up right now. So as you can see here, the dollar is shooting up, which causes, right, the euro to shoot down, right? To shoot down and not right, because with the euro USD, has an inverse relationship with each other. It has an inverse relationship, right? and has an opposite effect. Now, when there is bad news for the US and good news for the euro, you'll see this market shooting up. So you guys can look at the US dollar index as another indicator as well to see where whatever currency pair that contains the US dollar, if it's going to shoot up or it's going to shoot down in respect to the US dollar index. For example, the Euro USD has a US dollar, right? It contains this pair has a US dollar, right? So every currency pair that contains a US dollar, it will let you know whether it's going to go up or down based on the US dollar index. I hope that makes sense. So it's always good to look back at the US dollar index to see where the US dollar, where the trend is going to go, right? In this case, the US dollar is shooting up it because there was positive news for the US, right? With this trade deal that is happening with the EU. And it's the EU is being impacted by that because they're being charged a 15% tariff and they're investing their money into the US, right? However, they're gaining something back because they're getting, right, military equipment, right? They're getting military equipment. They're getting, energy. They're getting, they're getting a good deal as far as like tariffs for automobiles and everything else. So, 15% tariffs, right, to them is not bad, right? They would rather take a 15% tariff deal rather than a 30% or rather than a 50% or a 60%, right? They'd rather take a good deal, right? At a low amount, right? A low percentage. So I believe initially they proposed a 30% tariffs on EU, right? So they cut half of that. They cut it to a half at 15%, and they decided to take that deal, right? So anyways, now when it comes down to the US dollar, and you guys are looking at USD pairs, right, with currencies, you guys can see here that the US dollar is gaining strength, which impacts the Euro USD, right? And when you look at the pair Euro USD, Euro, it's it's at for example, like Euro USD, how currency works is that on the left side, when you have the pair shooting up in value, right, on the buy and the bullish run, then the pair that's right next to it, I believe it's called the quote, right? The quote pair. The quote, which is the US dollar, it will lose its strength. If the base, the euro, because here 1 euro equals to 1.16 USD. Okay, this is how you read this. 1 euro equals to 1.16 USD. You guys can see the numbers here. All right. Now, the base, which is a euro, right? $1, 1 euro equals to 1.16 US dollars, right? So when when the base decreases, the quote, which is a US dollar, increases in strength. It gains strength, right? And vice versa. When the quote decreases, when it loses strength, now that impacts the base, which is a euro, and it gains strength, meaning that it will shoot up. Okay, it will shoot up. And recently, last week and the weeks before that, we have seen a gain in euro. We have seen a gain in the euro in euro, right? So so you guys can see this. You guys can see a gain, a push up which means that the euro was gaining strength, and now it's losing strength, right? Now it's losing strength because of the trade deal, because of what's happening right now, and the US dollar is gaining strength now, right? Causing the euro to lose its strength. I hope that's making sense for you guys. And I'm doing my best to break it all down for you to make it simple for you guys because I know, beginners and intermediates are going to be watching this. So, but this takes information, this takes repetitive information, it takes practice, it takes, training your eyes. And we guys look at news and you guys read through this, just know that whenever there's, news is just an excuse. And whenever there's positive news happening, not it doesn't necessarily mean that it's going to be positive for the US dollar, right? So, and we'll dive into this more. You know, when there's positive news happening, it's negative news for the markets, right? As far as the assets. So, for example, let's look at gold. I'll show you guys here real quick. Let's look at gold. So, gold right now is it's it's uh it's on a bearish run, right? It's dropping in value. We can see here the meter is on sell. So right now gold is tanking, right? I'm looking at the 4 hour here. So right now gold is going is on it's bearish, and despite the fact that there was positive news, right, with this trade agreement, it's positive for the US, but it's also affecting the asset pairs, it's affecting the commodities, right? It's affecting these precious metals, the it's affecting these markets, right? So when there's positive news happening for the US dollar, it's bad news for commodity pairs and for all these other assets. So when I say news is just the excuse, news is there just to manipulate, just to control the narrative, right, of how you're going to view this. So when there's negative news happening, and when you look at the markets here, as we're looking at here, why is it on a downtrend? Why is it going down in value? Why is gold going down when we see the US dollar going up? So when there's positive news, when there's positive news happening like this, when you go back to the markets, it's going to affect, for example, here gold, it's going to go down. And vice versa, when there's negative news happening, when you see negative headlines, when you see negative words and negative headlines happening, right? It's positive for gold, it's positive for these commodities, which means it's going to shoot up, right? It's going to shoot up in value when we see that. So this is very, very important to keep in mind because a lot of people get confused when when they go over this, right? A lot of people get confused as to why this happens, to the commodities, to the markets. A lot of people get confused on why this happens to commodity pairs and to precious metals and to these assets and also crypto, why there's an inverse relationship, right? Shouldn't it be all the same? Shouldn't it be all going in the same direction? Why does it have to be opposite against one another? Now, it doesn't always work that way. There are times that the US dollar and gold goes in the same direction. It all depends on what's happening in the environment. It all depends what's happening in the economy, right? There are times where the US dollar and gold they go on the same direction, on the same bullish run or the same bearish run. So, um, it's very, very, you know, um, crucial to know this because it affects your technicals. It affects how you look at the markets. It affects, your positions. So, it's very, very, very crucial to know to learn this. And as a trader, as an investor, you should be looking at this information. You should be knowing this information, and not just, ignoring what's happening, in the economy and not doing nothing with it. Because when we look at this, we're looking at fundamental analysis. This is fundamental analysis. All this is fundamentals, looking at news, looking at what's happening in the economy, looking at what's happening in the world. And then we we gather this data, we gather this information, and we make an educated decision based on this information before we dive into technicals, right? Before we dive into, our market executions and buy orders and sell orders. And so do not forget that in the beginning of the week, it's always good to look at the market overview. Look it's always good to look at news, because that is why I start my calls, looking at news, looking at what's happening in the market, look at what's happening, throughout the week. I take Mondays, Sundays and Mondays, the beginning of the week, I look at news. I look at what's happening. I look at the overview, and I prepare, um, you know, for later this week when I do take trades, right? So keep that in mind and don't rush into this. It's a process. It's repetition. Trading can be boring. Trading and looking at this stuff, it can be boring. Trust me, it is. To me, it's not actually not that boring. I'm very fascinated by it. Like it's very interesting to me to look at this stuff because, this is what's happening in our world, in our daily lives. Um, uh, Not a lot of people think about this stuff. Not a lot of people focus on this stuff, right? And trust me, I don't like looking at news. But when it comes down to trading and investing, like I have to be aware of it. Like it's good to be aware of this stuff, like as a trader, as an investor, and you want to take this skill set seriously, you gotta be aware of what's happening in our environment, in the world, because it affects your trading decisions. It affects your investment decisions. It affects what's happening on a daily basis when it comes down to your money, like what to do with your money. So all this goes into effect. So that's why it's so important to look at this stuff, because it has everything has to do with your personal economy, right? You cannot have one without the other. It goes hand in hand. So yeah, because I remember my first year, I really didn't focus on news. I just focused on technicals. I focused on, I just focused on the money and the technicals and the market, executions and when to buy, when to sell, and I was focusing on that, right? Instead of looking at the news, where you'll gain more information and you'll gain better knowledge on what to do when it comes down to your trading decisions and your investment decisions, right? It affects that. And no wonder, I would always wonder, like, why is it not working out for me? Why? Yes, I make money, but then I end up losing it, and I make money again, I lose it, and then why there's this huge candle. Why is this huge candle happening? Why is this, all these, wicks happening? Why? So the market, when you look at this market, it tells a story, right? It tells a story, like why is this, you know, um, what happened here at this moment, right? What happened during Tuesday, April 25th? What happened here? Why was there a bearish run all of a sudden? Right? Why is this happening? Why there are certain patterns? Why are there certain candles that are high in volume? There are some in low in volume, right? So all of this has an impact on the markets. So the market, when you do your analysis here, it tells a story. History repeats itself. It tells a story, right? Just like I showed you guys here with, the S&P 500, when you guys back test the S&P and look at the past events that happened throughout the years, that is why I have it marked up here. We have here tariffs plus inflation and wars and more, right? There was a huge recession or bearish run happening, right? They call it a recession, right? Which, we've always been in a recession. Anyways, that's another conversation for another day. But there was a huge drop, a few months ago when Trump took office. That was a big news event, right? And it impacted the markets. When we look at post COVID-19, back in 2022, that's when Russia and Ukraine war started, and that was the last recession that we had as well, right? It made a huge drop, right? That was another event, a big event. Now back in 2020, COVID-19, obviously we know what happened here, right? Another recession, another drop. Plus Chat GPT and OpenAI, that is the year when they launched the platform, and it caused a huge drop as well, right? So just know that all these events are orchestrated. All these events are orchestrated to happen, right? So, it's very, very important to learn this information, right? It's very, very important. And to follow the patterns and to know what's happening, right? Because it also impacts your trading decisions, okay, and your investment decisions. Now, I'm gonna go ahead and end it here. I really appreciate you guys for listening in and for looking at the market overview with me here on Market Mondays. And stay tuned for new videos and new content. And I will see you guys on Wednesday for Chart Work Wednesdays with Chart Work with Carlos. And make sure to subscribe and leave a comment and like and share this with someone that you know that might benefit from this, that will get some value. So I appreciate you guys so much, and I love you guys. I'll see you guys on Wednesday. Peace.